Good morning, everyone. This is Brad Matheny. It is the 5th of August, and boy, oh boy, what the heck happened to the markets? Look at this on the right side. I mean, wow. We haven't seen days like this in forever. And I mean, this just literally came out of nowhere in the sense that we've gone into extended crashing over the last 2, 3 days. I mean, we had been in this area prior to the Bank of Japan making changes. This is the Japanese Nikkei index. And we have just crushed downward on a massive trend. But now look over here, weekly. Looks bad, right? Yeah, I know. It looks like a complete washout of the entire rally phase. And again, I urge everyone to start looking at the charts here and understanding where support levels are, because this looks like uh, basically a massive disruption in underlying markets. I'm believing that this is less and less about the Bank of Japan raising rates by 1/4%, although it could be unwinding a broad derivatives trade. But at the same point in time, to see the German market down, the UK market down 3.5%, the Nasdaq down 5.6%. I mean, this is the Nasdaq right now, and look at this. This is weekly. This is the beginning of the week here. This is a very broad crashing structure taking place. Yeah, I have a lot of lines on the chart, but this is a very broad crashing structure with a lot of volume unwinding. And it really does go back 1, 2, 3, 4, 5 weeks before we start to see this big roll in the markets. And I'm still under the belief that this is what I call the Kamala crash or the Kamala crush. Dow Jones is holding up better on a weekly basis, really almost untouched in the trend. You can see here, we can see Bitcoin is down 13%, almost 14%. Big, massive crush. And what's happening out of this entire trend is that we are essentially destroying valuation. So we're destroying the price of the stocks or the assets in this process, making these assets a better deal in the long run. So understand it's price versus demand. So when you have higher prices, you have lower demand. When you have lower prices, you have higher demand. Theoretically, unraveling all of this rolling of price here recently is creating or should create a broader vortex of demand. So I am still looking for a vortex rally in the US market to set up. Really, we're going to watch these assets over the next couple of days and weeks to see what's going on. This is very deep selling, folks. This is extremely deep selling, extremely aggressive selling. And I still honestly believe that this is more of a panic trade than anything else. I really do. I can't see how this is moving where, as it is, I mean, hedge assets, global assets, US stocks, UK, everything. It seems like everything really is just unwinding right now. And I think it really comes down to Kamala Harris. I think that's a big enough change. I keep asking myself, what has changed over the past 2 or 3 weeks? We went into the markets here, we were trending. Let's take a look at the Dow Jones here or the SPY, although I'm going to have a lot of lines on here. So let's go to the SPX 500. So keep asking myself, what has changed? So this is monthly. Okay, it doesn't look horrible on a monthly basis. It really does not. But what has changed in the last 3 or 4 weeks? Literally, we went from This is monthly. So what has changed from back here to right here? And the only thing that I can come up with is the US presidential election. I mean, yeah, we have potential wars in the Middle East. Yeah, we have some issues with credit markets and debt markets. Yeah, real estate is overextended, and the Fed may be a little behind the curve in terms of rate changes. But none of that really disrupts global markets to the tune of, you know, 4.5, $5.5 trillion, like the markets have reacted right now. And that's my estimate on a global market meltdown. If you generalize that the global markets have collapsed maybe 5, 6, 7% on a global economy that is 100 and call it $130 trillion annual GDP, you're wiping out, literally, in my estimate, probably somewhere between 5 and $9 trillion of global wealth over the last 2 weeks of the market. That's 9 to 10, call it $6 to 10 trillion wiped out of the market over the last 3 weeks. Why? What was the cause? It could be a flash crash. It could be something that just came about because of the Japanese Bank of Japan. It could be something where we've had a broad catalyst of uncertainty, particularly around the U.S. presidential election. But what would wipe out 6 to 10% of global stock market value, unless it was some real underlying concern? And that's what I'm really wanting to get to, is that right now we need to be very, very cautious. This is a very unusual market. Of course, my SPY cycle patterns are not going to react well in this environment. We've got some kind of broad market news that has taken effect. I'm sorry, I'm getting a lot of Discord messages, but basically from this area onward, this has been news. And in my opinion, it really comes down to when Biden exited the race right there. I'll change the color of that. This is my opinion still. I've been calling it the Kamala crush or the Kamala shakeout, and it really started right here. Okay. That's when Biden left the race, announced that he was going away, and left it to Kamala. And I believe that again is the day that, let's call it, all hell broke loose. I believe that's really, I think it was there or here. This is a Friday. Let me see. Friday. Yeah, there's no 19th. So it would have been probably right here. Nope. I was wrong by 1 week. Right here. So this was the pullback with Biden, and this is daily. So understand that we have a pullback here and I'm trying to be rational here. When the markets are like this, it's better to have rational thinking. So we have a pullback of 3 or 4%. Not a big deal. Really, not a big deal. Markets pull back 3, 4% all the time. And then we get into Kamala setting up and getting the nomination. And if I remember right, I could be wrong, and maybe it was back here. And then we got the nomination and she crushed. And then we had a little bit of a pullback. And then the Bank of Japan made the big news. So is this a 1-2 punch kind of scenario that unwinds the market? The big issue for me is looking at this volume. We've had huge volume underlying. So this Kamala crush was not necessarily the issue. It was like the small hole in the dam, and maybe the Bank of Japan became the big hole in the dam. And a Bank of Japan move, raising rates, trying to defend the yen, could very well be an unraveling of some sort of a carry trade, relating that, if the Bank of Japan is having to defend currency against weakness, then other central banks may be forced to raise rates in an attempt to defend their own currency, to battle off stagflation, and to essentially defend their currency. So if we move into a broad defending of currency mode over the next year or two, you could see very broad unwinding of global markets, again, essentially raising their rates, deflating their assets, tightening their money supply, attempting to battle stagflationary processes, which could unwind into a much broader process. Now, again, the shock value here, I will tell you, the shock value of doing this, just like the Fed has done, will play out where we may see a pullback down into these lower areas here. Well, let me come over here to a new to a blank chart. So this is my new tool. This is my new trading view tool that I've been working on. We'll come back over here to monthly. This is the SPX 500. And you can see that we have massive support. Reason I'm over here is because I have a lot of drawings on the other chart. Massive support right in this area off monthly. And then we have very deep critical support down here in this area. Okay, so now I'm not saying that we're going to crush down into this area, but look at how COVID fell down into this area and retraced. Look at how the pullback came down into this unique 382 area and retraced back upward. We will get a peaking pattern up here, which will move this area up into probably this area. I'm just guessing. This is going to set up a peak in another bar or two if we see this continued pullback. And that's going to move this unique 382 area up, and it'll move this ultimate 382 area up as well. So we're looking at really these areas. So these are the areas, in my opinion, long term, that we could see a broad market pullback somewhere into this area or somewhere maybe into this area as a broad market pullback. But again, I keep asking myself, what has changed? What really has changed? And I think it's going to, instead of continuing to contract downward, which is what we're seeing right now, all we're seeing is this massive downward activity. We're going to see it actually roll into sideways trending before we get out of this. Now, this is monthly, and I've drawn it incorrectly. So we're going to probably get a month or two of rolling and then back into a rally. And I would argue that's probably incorrect as well, because I believe this type of a sudden downward market move, you can see how the unique 382 level is up, the ultimate 382 level is up. That's because this new peak here. I would argue that we're going to roll maybe for a week or two and then push back higher. I think this is all just a sudden panic type of a move, and I urge traders to be very cautious. You can make a lot of money, you can lose a lot of money, but again, look here. So let's see if we're really crushing the market. I would expect gold to have absolutely collapsed. And gold is down today. Okay, this is weekly. You can see here. Let's go back to daily. Gold is down today, but it has not absolutely collapsed. When I say a collapse, I'm talking about gold moving aggressively downward into this 2200. That's what would happen during a real crisis mode, is you would see gold and silver really start to collapse. And again, what I'm thinking of is that we're seeing an unraveling of asset valuation, maybe a bit too much of a panic right now. And I think we're going to likely see this revert back up to the upside over, I'm trying to get rid of those messages, over the next, let's call it 20, 30 days as kind of a broad unwinding. Yeah, gold may end up back here in 2350, maybe down here in 2300 if we get some kind of a big pullback here. But ultimately, I think that we're really looking for the markets to move upward in a consistent manner. And that's going to be the same thing here with the SPY. We're going to open at 313, which is way down in this area where I highlighted how below the daily support level, really trying to target this lower level here. I think this is a big, broad washout, in my opinion, freaking out the market, probably going to find support and then make a deep V rally back out of it. And I think it's just going to come from a settling. Remember, as price decreases, we're looking at a greater stock market valuation. So when we look at the cycle patterns, and we're going to ignore these for now because they're not going to perform. I'm telling you, in this type of an unusual market, they're not going to perform. We have an up, down, up. We have a top resistance. We have a flat down. We have a harami, and we have an inside breakaway. Okay, forget about all that because the markets are reacting to something completely ambivalent to these Gann and Fibonacci cycle patterns. The markets are reacting to a very deep crisis, and what I want is right here, and how they are reacting is relative to, come in here, how they're reacting is relative to actual devaluation of price. So remember, I had talked about this weeks and months ago, is that you are going to be looking at a global asset devaluation. Okay. It made sense to me months ago that we are going to be looking at global markets under pricing pressure. They're going to be struggling with an economy. They're going to be struggling with growth. They're going to be struggling with currency devaluation. And what's going to happen is you're going to see global markets, I thought, really struggle with trying to maintain pricing levels that had been established over the last, call it 10 years, 12 years. So in other words, oh, look, everybody loved the whatever widgets. 8 years ago, China was the king, and the Asian markets were doing really well. Yeah, but now they may not, because now we have a dominant trend which is in place, which is the US dollar dominance, the US stock market, US economy dominance. The Fed has created a predatory process, and this could be the unwinding of deep assets. You will see over here, when I say deep assets, I'm talking global. You will see over here, I created these two new charts, trying to find them real quick. Here they are. The NASDAQ QQQ Momentum Trend Index. Notice it's getting larger, getting much larger here, really rallying right over here. Very unusual trending to be rallying in a downtrend. And what this is telling you is that price is decreasing, as you're seeing here, okay? But what you're seeing, and down here on the SPY, but what you're seeing is real valuation. So price is dropping, but real valuation is saying this is a great time to be buying. It's what this is suggesting, is that we're seeing price decline in an environment where this is a great time to be buying. So, and again, the messages in the background, I apologize. So I'm holding my breath right now. We've seen stronger US dollar demand. This is my SPY base trend index. And we've seen smart money index rolling down into this basing bottoming pattern. Gonna be a very deep low this week. I'm certainly waiting for some confirmation that this is some very deep rotation, but we are already very deep into this trend. And again, the volatility index had already moved. Here we go, down into the 12.27 area. We're likely going to get a dip way down into the 7.5, maybe 6 area, which is going to be extreme rotation. So if we were to get a very big dip here and a roll back up to the upside, this would be a very deep V bottom. So be aware that where we're at right now, I think we're looking at, the Kamala crush taking place. I'll put it here. Kamala crush plus BOJ rate plus is creating this massive downward cycle phase, which will likely end in a deep V bottom and rally back out. Okay. And I think that's a very logical outcome once the panic flushes, which could very well be today. Remember, we're going to be opening in this 513, 515 area on the SPY. Huge breakdown. We could end up then as 495, maybe a bit lower, but I think this is close to the end of extreme panic. And I think that the reality is we're going to come back into real reasonable thinking again. I think people are going to suddenly realize that we wiped out over the past couple of weeks, we wiped out 11, 12% in a deep pullback, a panic pullback. And I think that's going to really change the market dynamics going into the end of the year. I think we could slide easily back into a re-rally phase, pause, caution, and trying to find some sort of balance. I think this panic is pretty much, I don't want to say over, but I do believe that we've hit the apex panic mode. And today is probably it. This low, this deep low is probably the apex panic mode. At this mode, I think we shift back into more reasonable thinking. At least I would hope that the markets, because like I said, ask yourself, what has changed? What has caused the markets to eliminate, 9, 10, 11% of total market value? Possibly, 13 to $20 trillion in global assets. What in the world caused this over the last week? Can you think of anything that would cause the markets to do this? I can't. I can't really think of anything that would cause. There's been no global disruption. There's been no global crisis. There's been no global financial market implosion. This is just strictly panic. That's all I think it is. Okay, that's it for this morning. We'll talk later.